And we're going to have oil at 10:30.
We sure are. So what time is it? It is 10:18 right now. We get those EIA numbers at 10:30. And just to put this, how about, I mean, we all saw, I imagine if you're watching this show, the move in oil yesterday.
Oh, yeah.
But look at these daily bars, right? You just put it on a daily. You go from 49.62 down to almost 46, $3.50.
It was a fast move, too,
and then,
man.
you know, just tacking on even Monday. So from Monday, you go from 52 to the end of the day, Tuesday, to 46.
Right.
Just crazy, right?
Right.
So we'll back it down into a 5-minute chart. Right now, quite a little bid on oil, even from this morning. You're looking at about 8:30. We're trading at 46.59. We're now up more than $1 from that level. You got oil trading at 47.70. Looking at the February contract. And let's just see how some of these spreads line up. So we'll jump to the 11 a.m.s first. And we're going to have an option at 47.50, which is not bad. We're about 17 pennies away from that. I imagine there's going to be some premium priced into this product this morning.
There should be.
Right, yeah. So this has a floor of 47.50. We're trading at 47.63. Really not that bad.
No.
You know, you're forced to buy at about 12 pennies above where the market is, but with paying that, you have a risk reward of risking 27 to make 123. Even if you just want to be bullish, you know, after such a destruction from 52 to 46 over the last 2 days, not a bad price. You got oil trading at 47.68. You're buying it at 47.78, and for those 11 cents that you're paying in premium, you get this type of risk reward.
Right.
Pretty good. And on the flip side, to see how things, now this would be your out of the money right now because we're trading above the ceiling, 47.71, and not that bad. You know, you're selling it at 47.35, risking about 14 if you ever saw a pullback back to kind of the lows of yesterday at 46. So both of those lining up at about $43.
Okay.
Now that is a little pricier, but keeping in mind that we're about 16 pennies away from, so you
Right.
have that intrinsic value, which prices it sometimes. Let's just see how some of the noons. So we'll jump back over here, jump to the noons. So we have the same exact spreads with 47.50 on the bullish side. Again, really not that bad. You're buying at 47.83. So this one having exposure till noon instead till 11. And on the bearish side, pulling this up.
So they're charging 8 pennies on that side. Over the 11.
18.
time.
18.
Yeah, no, I know that, but I'm talking about from the...
Okay, the difference between the 11 a.m. and the news, nice. And then on the bearish side, you're looking at 20, so 53 versus about 43,
Yeah.
which was the 11. And then let's see how the dailies line up, because, man, like, you know, we might get some action past noon in this market.
Yeah, this would be a day that the longer you could go out, if that premium was
agree.
a killer, there's no doubt.
I mean, could you give me a defined risk for, like, the end of 2018? I'll take that too, right?
Yeah.
No, seriously, because
Yeah.
I imagine the volatility in oil is not going to stop anytime soon. So the dailies line up with 47. Not really an ideal trade if you're making a volatility
These
trade.
are 230, right?
Yes.
So you know what's so cool here, too, folks, all right, is that picture. You got oil priced in U.S. dollars. We got the Fed out at 2.
Yes.
So as the dollar moves, it's going to
Sure.
affect oil also.
Sure, definitely.
You know?
So you had a couple options. I mean, if you just wanted to go bullish, really, or bearish, but bullish, not a bad trade with some defined risk. You get $3 to upside to 50, right? You get oil trading at 47.73, and you're buying at 47.89. So yeah, you have exposure all the way down to 47, but not the end of the world if
Right.
you really wanted to go bullish. At least you're defined there if you got something to fall off the plate. Let's see how these line up. Yeah, so 46 being your only option really for the $5 spreads that expire at, and that's just, it's a little bit more. It doesn't quite, you know, defined risk when you're risking, you know, $1.77 in that oil market. But we'll see. It's 10:22. We get those numbers at 10:30. And let's just check back and see that chart. It's not stopping, man. We're rising as we keep speaking. We might be at 48 by the time those numbers hit.
Nice.
Yeah.
Welcome back, folks. We had crude inventories fall 497,000 barrels.
And the number they were looking for initially is Bloomberg. There's a few estimates out there. Bloomberg looking for a drop of about 1.35, so not quite the drop they were looking for. Gas inventory is rising 1.7. See how that market's reacting. A little bit of a spike higher, as you would expect with, you know, those numbers coming, but right back to where we were. We'll see how that shakes out. But initially 47.75 in the price of crude. And as we know as we watch this,
And we had the API last night was a build of 3.5 million.
Yeah, it was 3.45. You said a surprise build. They had that. There you go. API had a 3.45 barrel rise last week, which was a surprise, and that number coming in. So you had crude oil falling about 500,000 barrels, and yeah, kind of hanging around 47.73. We'll see where that number shakes out.
Welcome back, folks. Dow is up 226, Nasdaq's up 68, S&P's up 34, and good old 2 o'clock is going to be in action, man.
I can't wait. We should have lots of action, man. Just jumping back, speaking of action, oil getting a little bit of a bid. So we're trading at 48.12. We're trading about 47.70, about coming into those numbers. Higher oil prices. If you're going to fill up your gas tank, get out there and fill it up right now, man, because it looks like we're getting a little bit of a bid. And again, just kind of bouncing back to put things in perspective, right? There's yesterday's decline, so we're just in the middle of that range even. But nice little 40 cent bump. And what were the price? 47.50? Yeah, 47.50 was the price point of that if you were making that volatility trade. So we're now a solid 65 cents above that level, which would not have been bad.
No.
Yeah.